It was a pretty standard month overall for July. I added money when I could, reinvested my dividends like always, and kept the machine running. I'm Nick and this is the Dividend Growth Income channel, and in today's video, I'm going to walk through the latest activity in our portfolio for the month of July. Performance-wise, the month started off strong, but some tariff drama near the end brought things back down, and we ended July more or less flat in terms of performance. That said, the focus here is always on income, and that continues to climb. In addition to dividend income collected, I'll show you what I bought, what I earned, where the portfolio stands heading into August, so let's dive in. So a little less than 3 years ago, I created this YouTube channel, and with that I opened an account with Fidelity. I call it the Dividend Growth Income Portfolio, and the objective here is simple. Document the creation of a dividend growth portfolio starting with just $100 cash and make consistent contributions over time. I added money every week, every month, whenever I could. Sometimes that's been as much as $1,500 a month, and sometimes that's been as little as $500 a month. But regardless, I add fresh cash every single month to keep things rolling. And I want to show that anybody can make this happen. And today, that account is valued at over $45,000. It's paying out more than $100 a month on average in dividend income. For less than 3 years of this account, I think that's not too shabby. So let's kick things off with the good stuff. The dividends I collected in July. I received a total of 9 dividend payments in the Dividend Growth Income Portfolio. Here they are in order of payment. On July 1st, I collected $6.45 from Automatic Data Processing, ticker ADP. On July 2nd, I collected $7.18 from VOO. This is an S&P 500 index fund, ETF. On July 10th, I collected $21.99 from Vici Properties, ticker VICI. This is a Las Vegas entertainment properties real estate investment trust. On July 14th, I collected $12.65 from Mondelez International, ticker MDLZ, makers of Oreo. On July 15th, I collected $10.32 from Medtronic, ticker MDT. This is a medical device maker. They're an Irish company. On July 15th, I collected $5.04 from Agri Realty, ticker ADC. This is a similar company to Realty Income. It's a net lease real estate investment trust in retail. I collected $6.76 from Main Street Capital, ticker MAIN. This stock's actually been doing very well for me as a hold in the account. They're a business development corporation, and it's been on a tear, and it pays every month. I love it. Love Maine. On July 23rd, I collected $10.42 from Cisco Systems, ticker CSCO. It's a technology company I hold in the fund. They work in communications, networking, that kind of stuff. On July 31st, I collected $13.25 from Mid-America Apartment Communities, ticker MAA. They are as they say, an apartment company. They're another real estate investment trust. They own luxury apartment complexes along the Sun Belt in some really nice regions in North Carolina and Florida, places like that. So altogether, that brings my total of dividends for July to $94.06, getting so close to hitting $100 in this cycle, all of which was reinvested to keep the snowball rolling. We can compare that $94.06 to the $60.49 we collected in July of 2024 last year, as well as the $83.36 we did in the last quarter in April, which is in the same cycle. Either way, the direction is clear, the income is continuing to grow, and that is the goal here. We had one company in the portfolio increase its dividend payment in the month of July. That's Mondelez International, ticker MDLZ. They raised their quarterly dividend by 6.4%. It's respectable, marking their 12th consecutive annual increase. So Mondelez is now paying $2 per share annually, 50 cents quarterly, with this popular portfolio of snacking brands, the payout ratio under 60%. I'm glad to continue holding this position. I made a few small buys throughout the month of July, just sticking to the plan and putting capital to work where I saw opportunity. On July 7th, I added 0.679 shares of Chevron, ticker CVX, for $100. Also on July 7th, I added 0.328 shares of United Health, ticker UNH, for $100. This one's been a falling knife for me lately, but I still believe that by, say, 2028 or 2030, I'm going to be glad I stuck with it. On July 14th, I added 0.649 shares of Procter & Gamble, ticker PG, for $100. On July 15th, I saw an opportunity to increase my position in BlackRock Inc., ticker BLK, adding 0.094 shares for $100. Also on July 15th, I added 0.674 shares of Mid-America Apartment Communities, ticker MAA, for $100. So altogether, that's $500 of fresh capital added into the account for July. Slow, steady, and consistent, just like always. Coming into August, I do see some opportunities in the portfolio. I'll likely continue adding to United Health. I am down about 50% on this position, and they just can't seem to catch a break. I'm also in the red on Lockheed Martin, Mid-America Apartment Communities, Procter & Gamble, Mondelez International. These are all companies I could take the opportunity to increase my position and get a better cost basis. I'd also say I'm quite likely to add to SCHD and VYM, the two dividend-focused ETFs in the portfolio, keeping it simple, staying consistent. Let's take a quick look at how things stacked up performance-wise in July. We started the month with the account value just shy of $44,700. And after adding $500 in fresh cash and collecting $94.06 in dividends, we ended July just under $45,300. This is a modest 0.2% increase in total value. So basically a flat performance month. The account value did get as high as into the $46,000 range, but it came back down towards the end of the month. Now for context, the S&P 500 grew by about 2% in July, so yes, we underperformed the broader market this time. But that's fine by me. I keep my 401k fully invested in the S&P 500, and I've got sizable positions in VOO throughout my Roth IRA, and even in this portfolio I have a stake in VOO. So I don't try to beat the market, I just try to take advantage of it. More importantly, our annual dividend income grew by about $23, thanks to a combo of new purchases, dividend reinvestments, as well as that raise from Mondelez. Now, as for early August, things are already trending down, but that is okay. We're still very much in the building phase here. I don't mind seeing red in the short term, if that were to mean better prices on stocks that I want to own long term. So that wraps up the performance side of things. Let's jump into the dividend income chart so you can see how the cash flow is trending month to month. Here's the chart of my annual dividend income broken down by company. We are unfortunately now in August, which falls into one of our least exciting cycles, those February, May, August, November months. So I'm only expecting about $35 in August, since only a handful of our holdings pay during that stretch. That said, it's always followed by a record-breaking month because the majority of my companies pay out in the March, June, September, and December cycle. During those months, we could be collecting as much as $200 in September, so we still have plenty of milestones ahead for this account in the year 2025. And I'm often asked why I don't try to balance things out, add more February, May, August, November payers. And look, the answer is I just don't see a need to do that. I'm looking at this from a quarterly income lens, really, and I'm satisfied with how the portfolio's dividend income is progressing overall. Now for August, we're expecting payments from two monthly payers, that's Agri Realty and Main Street Capital, they pay every month, as well as small payments from MasterCard, Starbucks, and Procter & Gamble. I've been focusing more on Procter & Gamble these last few months since it's been entering what I think is a decent buy range, and I do see this as a core staple in this portfolio long term. I love Procter & Gamble. So with that said, let's take a look at the account summary page to wrap this all up. This page really sums it all up for me. I can see how my account's doing, where I'm at with my goals, the monthly payment graph, and a full history of the dividend income. It's hard to believe we started this almost 3 years ago with just $100, and now here we are with an account valued at over $45,000. The holdings have grown by 15%, and when you add in the nearly $1,900 in dividends this account's paid, we're up over 20% overall. This $45,000 portfolio came from just over $37,000 in contributions, so my money has been put to work. As for income, we're currently yielding 2.8%. And this is lower than some dividend portfolios, but this is by design. It's still an early stage account with a relatively small capital base. I say relatively because everyone's kind of in a different place, different goals, but I'm focused more on building a growing income stream, not necessarily maximizing yield today. If I wanted income today, this portfolio would look very different. That time is still years away. I'm actually working on a 5-year plan for this account, keeping everything on track. You can see the goals here on screen. I've set incremental milestones to keep things kind of fun. I've already hit a few. This year we've crossed the $100 per month milestone goal, and we're about 70% of the way to our next goal, and that is earning $5 a day in dividends. The ultimate goal for this account is for it to pay out $2,000 a month. Still quite a ways off, but we can put a real number on it. We are 5.28% of the way there. And based on how far we've already come, it's easy to see how the rest of the path gets filled in. It just takes time, patience, and consistency. We will get there. Now, why is my goal $2,000 a month? Because this account is meant to supplement my other investments. I have the 401k, a Roth IRA, and I max that out every year. And I have an older traditional IRA before I got into the Roth. And this year I even started contributing to a health savings account. These are all tax advantage accounts designed to handle the heavy lifting in retirement. This taxable YouTube portfolio is here to provide a couple $1,000s in monthly cash flow to help bridge the gap, offer some flexibility. Perhaps it helps me retire a few years earlier or shift into a more part-time role down the line. That's the goal, freedom and options. Now, I'm long overdue for a video where I go stock by stock and talk about each position in this portfolio, where I see them now and over the next few years. So if you haven't already, make sure you've hit that notification bell because I am actively working on this video right now. I haven't gotten super active over the summer, and I realize that life has a way of monopolizing my attention, in periods of time. But I do have a lot of good stuff coming as we head into fall and things do settle down a bit for me. AI just hasn't figured out how to clone us, unfortunately. But I really do appreciate all of you who support the work we're doing here. I do these videos for you. Thanks again. I appreciate you all watching, and until next time, keep investing.